Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever time zone you're tuning in from. I just saw your comment right there, C40, 4 a.m. Wow, that's tremendous. Good morning to you, C40. Glad to have you around with us this morning. Well, as always, I'm very excited to welcome us all to yet another promising edition on the Forex Morning Mastery. In fact, our last edition for this week. So, happy Friday to everyone, and I do hope you had a splendid weekend and, of course, was part of our profitable journey for this week. I'm very excited to be with you here, and we are hoping to replicate what we did during the course of the week as we join the market as they round off their trading activities for today. So welcome, and my own name is Sheriff Daramola, and for the next 42 an hour, I'm going to be your host as I will be taking you on a trading journey where we will be evaluating the financial market together from both technical and fundamental perspective using our basic tools such as the economic calendar, trend lines, key levels, and of course chart patterns to unravel the potential trajectory for today. And of course, being the last trading day of the week, we are going to be taking some other psychological factors into consideration while we review our current market structure. Being the last trading day of the week, it is expected that market participants will be rounding off their trading activities ahead of the weekend. So what this simply means from a technical standpoint is that those who had been part of a profitable journey, that is a part of a momentum, be it bullish or bearish, through the course of the week, may want to start considering taking their profit ahead of the weekend. And this usually results into reversal setups where we see price action move in the opposite direction of prior leading price action. So we are going to be taking this into consideration too, as well, as it's very significant due to the fact that we are in an era where there is geopolitical tensions, which of course incite uncertainty in the market, and majority would not want to leave their positions open ahead of the weekend because anything could actually happen. So, with that being said, I would like to welcome newcomers in the house. I know there are a couple of them in the house. If you are around with us this morning and this is your first time, please let us know in the comment section by maybe typing hi or telling us you're a newcomer and with your name. So, I'm very excited to welcome you all. And you may be wondering, what is it that we really do here on the Forex Morning Mastery? Well, first of all, it's important for you to note that this is not a signal service platform, but instead an avenue where we come together to have a deep insight and understanding of the market dynamics using fundamental and technical perspective to understand how the sentiment in the market, and of course use that information to make an informed decision. Now, be it you may be a day trader, scalper, or position trader, or even a swing trader, you can actually use the information you gather in this community to enhance your own trading decisions and of course make independent trading decisions on your own. So as technical traders, we come here 3 times in a week: Mondays, Wednesdays, and Friday, where we come to review how well our position are doing and of course prepare for that particular day or for the remainder part of the week. So I'm very excited to have you around with us this morning. I encourage you to actively engage in the comment section. And if you have found this content in any way helpful in making your independent trading decision, I would really appreciate your support by giving the video a thumbs up. Your likes are valuable to me, and of course it also helps the algorithm promote the video to a wider audience of traders. So you are highly welcome, everyone. So with that being said, here we will be diving right into the business. And as usual, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today. And of course, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, giving us valuable information and, of course, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we've been looking at since the beginning of the week, remember we have been looking at three financial instruments, including the USOILSPOT, the GBPUSD, and of course my favorite, the XAUUSD, popularly known as the gold spot. Now, based on this asset, we are going to be focusing on economic features from both the United States and the United Kingdom economy. And most importantly, we usually look out for high impactful events, except for days where we do not have any high impactful event. Then we include some mid-tier economic features to guide our decisions for that day. Now, looking at the economic calendar, we've had a bunch of economic features from both economies through the course of the week, which obviously had played a significant role in driving the sentiment in the market. Now, this week so far, we've had look at what we had. We are going to be looking at high impactful event. So on Monday, we saw the retail sales data from the United States, which came in lower than expected, giving us a sign that there is a little bit of contraction in the US economy. Then fast forward to Wednesday, we saw the CPI data from the United Kingdom. We all know how important the CPI data is. It's considered to be an inflationary gauge data, giving us an insight into the inflationary status of any particular economy. And obviously, the data came in way below market expectation at 0.3%, giving us signs that there is disinflation going on in the United Kingdom, further inciting the idea of potential interest rate cut anytime soon. Then fast forward to Thursday, we had the Bank of England's interest rate decision, which is one of the major highlights for the week. And obviously, as market had expected, we saw the Bank of England decided to leave interest rates unchanged, just as the market had actually expected. Now, fast forward to today, Friday, June 21st. We're looking at a bunch of high impactful events from both economies. We already witnessed the retail sales data from the United Kingdom coming in higher than market expectation. And of course, we saw a 2.9%, giving us a positive deviation of 0.86 as market participants and economics were looking at a 1.5%. So this is a very significant news development in the United Kingdom, and of course it also gives us an insight into what's it called? It's given an insight into how robust the economy is in the last 1 month. Now we also had the S&P Global publication. Now, for those of us who are not familiar with what the S&P Global publication is and how important it is for market participants to make informed trading decisions, the S&P Global publication it gives us an insight, a key insight into the health and performance of the service and manufacturing sector in the US economy or UK economy, depending on which economy we are looking at. And this report provides valuable data on factors such as business activities, new orders, employment levels, and can directly influence the sentiment in the market. And it has a range of 0 to 100, where anything below 50 is considered as a contraction and anything above 50 is considered as an expansion in that economy. Now, we had the composite PMI, we had the manufacturing PMI, and of course the services PMI this morning, where from the United Kingdom, of course, and we saw all of them though came in higher than the 50 mark, but the composite PMI and the services PMI came in below market expectations, whereas the manufacturing sector came in higher than market had expected. So it's more of a mixed reaction from the United Kingdom this morning, and I still think that despite this data we are seeing here, the path of least resistance for the pound sterling is still looking very bullish, considering the renewed buying pressure we've seen in the US dollar in the last couple of days. But we are going to be looking at how the market had reacted to this event, and of course use that information to guide our decisions today. Then finally, in about 4 hours from now, 4 to 5 hours from now, we are going to be looking at the S&P global publication for the manufacturing and services PMI in the United States. And from the data we are looking at here, market participants are projecting a figure lower than the previous month data, that is 51 and 53.7 respectively, as against the 51.3 and 54.8 for the previous month. Now, you would agree with me that in the last couple of weeks, the United States has been submitting less and not too impressive data, giving us signs that the US economy is gradually running into becoming sluggish at this point. Let me use that word at this point. And of course, there is this expectation that Federal Reserve may likely cut interest rate anytime soon. But the hawkish remark from the Fed chairman last week, and of course Fed policy makers, still holding on to the idea that they will be keeping interest rate higher for an extended period of time, waiting for more data to give us signs that inflation is thinning out. And one of the major data they want to be looking out for is a labor-oriented data, which is yet to come on the table. So we are looking at next week for that particular one. So for today, the upcoming high impactful event is from the United States, and that is the S&P Global Publication and the Services PMI. So of course, we are going to be going right into the chart right now to look at how the market is going to be anticipating this event. Obviously, we are going to be seeing this reflect on the chart as price action, patterns, and structures that we can actually use to guide our trading decisions going forward. So with that being said, here we will be diving right into the business. And as always, the first asset we are going to be looking at this morning is going to be the USOILSPOT. And you would agree with me, the USOILSPOT happens to be the most profitable asset on our watch list for this week, as we have been buying this asset since the beginning of the week. And of course, we had this beautiful ascending trend line which has been supporting the ascent of prices. Now, looking at the structure, and for the sake of those who are not part of our earlier session, and for those who probably will need an educational tool on how to use price action to understand the behavioral patterns of market participants. So, and another thing I would like to say here before I go into the details is that I will be focusing on the 1 hour time frame only, which is our execution time frame. And if you in any way missed out on our session on Monday, where I did a top-down analysis on the USOILSPOT, you may want to check the link right in the description box below to keep yourself updated onto how we got to this point. Now, at the beginning of the week, we had our key level at the $77.50 area. And of course, you know how we use our key levels in this community. It serves as a major guide in helping us to position ourselves for either buy or sell during the course of the week. So if price trades above our key level, we look out for patterns and structures that support the idea of buying the asset. Whereas if price drops below our key level, we look out for patterns and structures that support the idea of selling. So with that in mind, and considering the character of price action at the beginning of the week, it was more of buying this asset, as price at no point in time broke down that key level. Then in addition to that was this descending trend line we identified on the higher time frame, which is projected here on the 1 hour time frame, as you will see here. And of course, you saw how price broke out of that structure, which was one of the major signals that we look out for to join buying opportunities. And interesting enough, we saw price action come back to do retest of that trend line multiple times during the later part of last week. And for the fact that price still remains above that structure makes it much more reasonable for us to look out for buying opportunity. Now, scaling down into the character of price action during the early hours of this week, we saw how price action was initially confined within the $78 level, had our key level at the $77.50 area, giving us a range bound structure to work with. And you know how we do it in this community. Whenever we identify range bound structure, it emphasizes that there is a prevailing uncertainty in the market, and we exercise patience and wait for the market to finally make a decision, which usually will come in the form of either a breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. Now, with this situation in mind, we had ourselves strategically positioned at both the resistance and the support line of that range, and obviously we were part of the breakout retest of the resistance line of that range. And since that moment, we have been buying the USOILSPOT. Now remember, along the line we had multiple entries. We had levels like the $78.40 level, which we added more positions. We had the $79 area. We also added another one at the So we added another one at the $79.50 level and the 79 level. And of course, I think yesterday we had some couple of more buy positions, had the breakout of both the $80.75 and the $81 level, all of which are still running at this point in time. So we have about 1, 2, 3, 4, 5, 6 buy positions, 7 buy positions running, 6 of them running in profit, while the last one is currently running in a loss of about, let me see, about 25 pips at this point in time. And for those of us who are part of this profitable journey, well done and kudos to you. So all we need to do right now, you know how we do it in this community. Whenever price action moves significantly well in our favor, it is high time that we moved all our stop losses, secure some profit, and especially on a day like this, which happens to be the last trading day of the week, where we may likely see some profit taking activity happen here, inciting bearish pressure, we do not want to get caught up in a situation that will make us lose some of the profit we made so far. So at this point in time, the most appropriate area to move all stop losses to should be somewhere right below that ascending trend line, anywhere around the $80.75 and the $80.50 area seems most appropriate, as we do want to be given enough breathing space for price action to move around. Now, with a well secured position at this point in time, what is going to be our next line of action? How are we going to continue buying this asset today, or are there chances that we may start seeing some profit-taking activities which could incite a sell-off at this point? Now, before we go into the technical details of what we may be looking at today, it is important that we also keep ourselves updated with the sentiment in the market. What are the major drivers of this market? What has been driving this market since the beginning of the week, and what is likely going to be driving this market as we round off the trading week? Now, for those of you who are with me on both my TradingView and Telegram platform, you obviously must have gotten an update as to what we are looking at. But for the sake of those who are just joining us here, let's look at this together. Now, yesterday, the Energy Information Administration, the EIA, showed a larger than expected drawdown in US crude oil stockpile for the previous week, reaffirming the expectation of a tighter market in the second half of this year. Now, whenever there is a huge drawdown in US crude oil stockpile, what does this really mean in simple terms? Now, If there is a drawdown in the US crude oil stockpile, it simply means that there is high demand in the market and the supply was not enough to meet the demand, hence they had to take out of the stockpile to feed the demand in the market. So what this simply means is that there is an increase in demand in the market at this point, giving us the reason why prices have continued to find higher highs and higher lows in recent time. That is one scenario. Then the other factor here is the concerns over the potential escalation of conflict in the Middle East, which could disrupt global supplies from key producing regions like Iran and the likes around that area. And of course, the Houthis too are known to have been attacking oil vessels along the Red Sea. Now, recently we had that the Israeli are planning going for an all-out war on Hezbollah in Lebanon, which is further escalating the tension around that particular area. Now, this is likely going to be inciting fears of oil disruption in the market, hence majority will want to start buying and stockpiling oil just in case anything of such good will happen. And obviously, this will definitely increase the demand for oil prices, and our simple economics tells us that when there is an increase in demand, obviously price is going to rise. Now, another factor that we are also considering, which we talked about on Monday, was the projection of both the EIA and the OPEC Plus nations, where they projected that the second half of this year is going to be characterized with increase in oil demand due to the summer holiday. So during summer holidays, there's travels and tourism, and this usually incites more demand for oil prices. Then another factor we are also going to be considering is the increase in the pricing in the likelihood that the Federal Reserve will begin its interest rate cutting cycle anytime soon due to the softer US macroeconomic data we have been witnessing here in the last couple of weeks. And of course, considering the fact that the USOILSPOT is a US dollar denominated asset, anything that affects the US economy or the US dollar will definitely rub off on the USOILSPOT. Now, how does this come into play? I've talked about this several times here, but for the sake of those who are joining us for the first time, if the value of the US dollar continue to rise, maybe due to high interest rates, the oil commodity becomes much more expensive for other currency to buy. So they will need to convert their currency into a much more expensive US dollar before they can buy the USOILSPOT. And you know what that means. Technically, this will reduce demand, as majority will find it, because of its expensive nature, will want to hold on and wait for a better time to buy. However, if this expectation of interest rate cutting anytime soon is still going to be on play, it will favor more demand for US oil, as majority will want to take advantage of a devalued US dollar to stock their power. So as a result of this, based on what we have been talking about here, I've said so far, it is clear that the path of least resistance for USOILSPOT is looking very bullish. Now, the question now is, how do we intend to join this momentum? What is the path this momentum is going to take? Is it going to have some retracement move before we continue the uptrend continuation? As you will see here, since the beginning of the week, we have a massive impulsive bullish leg all the way from the key level into that high at the $81.35 level. So what path is it going to take for the uptrend continuation? Are we going to see price do some profit-taking activity, especially on a day like this, where we may see majority of market participants closing in some of their position, leading into a sell-off, maybe back into a golden zone area before the uptrend continuation happen? That is one scenario we are going to be looking at. Or are we going to see price traction transition into an uptrend continuation pattern? It could be a flag pattern, pennant, bullish rectangle, whichever case it may be, where the breakout of the resistance line of that uptrend continuation pattern will incite the uptrend continuation. So these are the conditions we are going to be looking at to navigate this current market dynamic. Now, with the recent trading activity here, we have an ascending trend line which we have used to mark out pivot highs and pivot lows, as you will see here. And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that supports the idea of buying. Now, if we zoom into this current structure, you will see that price action is still trading above this ascending trend line, and we will continue to look out for patterns that support buying ideas. Now, the only condition that will make us sell the US oil spot is for price action to drop, break down the ascending trend line and that $80.75 level, then we can start considering selling. However, since price action is still above the structure, I want to be looking out for more buying opportunities at the breakout of the resistance line at the $81.35 level, which is the highest point price action has been in recent time. So I do have a buy stop order sitting above the $81.35 level with the intent of continue the uptrend scenario if price action goes on to break out of that structure. But if it doesn't, and instead sellers continue to gain momentum, and then we start seeing price break down the ascending trend line, and of course we are not going to be joining a breakdown right away, but wait for confirmations like a retest of structure, then we can start considering selling the US oil spot. So this is how we are going to be managing our positions today on the US oil spot. As you will see, our center of focus this morning is going to be between the $81.35 level and the $80.75 area. Of course, we have a range bound structure where, depending on the direction of the breakout, will give us an idea of where price action is likely going today. So I encourage us all to mark out these levels accordingly on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. If you need some further clarifications, feel free. I'm here and willing to be of help in that regard. So I will be taking the next 10-15 seconds off as usual. Let's see if there are any questions before we move on to the next asset on our watch list. And do not forget to give that video a thumbs up if you have found this content helpful and useful in making your independent trading decision. I would really appreciate your support, and thank you very much as you do so. So I will be seeing you in about 10-15 seconds from now. Cheers. All right. So I see you, Constant Tamiklo. Good morning to you. Happy to have you around with us. Happy Friday to you too. And I see you, C40. Okay. All right. So you're asking here that, do you have any favorite Forex indicator? Well, to simply put, no, I do not have. I do not use indicators on my chart. I my strategy is more or less designed around incorporating fundamental analysis into price action based technical analysis. So what this simply means is that I look at the chart and try to understand the behavioral patterns of market participants using my basic tools, which are the key levels, trend lines, and of course chart patterns, to unravel the potential trajectory of price action. And one thing I've come to understand is that there are three basic emotions in the market. We have fear, we have indecision, and of course we have hope, which usually leads into greed. Now, due to all of these emotions, it tells us what is really what the price does tells us which emotions is actually prevalent in the market at any point in time. So for instance, if there is fear, then price continue to find lower lows and lower highs. And when there is indecision, we see price run into a range bound structure. And of course, when there is hope in the market, we see price continue to find new highs, leading into greed, where we see a reversal setup or a shakeout from that bullish trend to incite a sell-off. So due to this basic understanding in the market, I've come to realize that it is rather better for you to see price action for what it is and use it to understand how markets are thinking. And from my experience, these three basic tools have helped me in understanding these emotions, and of course helped me in strategically positioning myself for the next move. So to simply answer your question, I do not have any favorite forex. I don't even have a forex indicator, but instead rely on these basic tools I have talked about. So I hope I answered your question there, C40. If you still have more questions, feel free to let me know in the comment section. So with that being said, and in the absence of no further questions, I would Keskin, I just saw your comment now. Keskin, good morning to you too. So in the absence, okay, you're very much welcome, C40. So in the absence of no questions, let's move right into the next asset on our watch list. And I can see that we are not clicking on that like button. Please, if you have found this content helpful, we have over 10 people on board and we only have 3 likes. Let's make the number of likes here tally with the number of people on board. Good morning to you, Sahad. Glad to have you around with us this morning. So let's move on to the next financial asset on our watch list. So the next asset we are going to be looking at this morning is going to be the GBPUSD, the British pounds against the US dollar. And in fact, we've had some interesting situation during the course of the week, and in fact it has been profitable. We are on the positive side of our portfolio on the GBPUSD as well, though it's not as much as what we had on the US crude oil, but we are doing very well on this asset. And of course, during the course of this week, we've been able to capitalize on both the bullish momentum which started the week. Remember, the first half of the week was more of a bullish momentum, and of course we rode that momentum all the way into the 1.27325 level before we begin to notice bearish momentum resume. And of course, we caught that momentum right at the point where it started finding lower lows and lower highs. Now, for the sake of clarity and educational purposes, and especially for those of you who are not part of our first session, I will run through what really happened at the beginning of the week and what led to the decisions we made. And to have a top-down analysis on the GBPUSD, I encourage you to watch my weekend video. The links are right in the description box of this current video you are watching, so that you can have a background knowledge of how we got to this point on the 1 hour time frame. Now, at the beginning of the week, it was more of price action finding buying pressure. Remember, we had a range bound structure during the first 12 to 14 hours of the week. We saw price action confined within the 1.26895 and the 1.26615 level. Now, you know how we use our range bound structures in this community. Whenever we identify them, we definitely know that there is a prevailing uncertainty at that point in time. Negotiations are happening at that point. Buyers and sellers are struggling to gain some momentum, and of course, during the scenario, we exercise patience and wait for market to finally make a directional decision, which usually comes in the form of either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Then another thing we talked about on the 4 hours time frame was the fact that price action had broken down the ascending trend line we identified on the 4 hours time frame. So this is the remainder part of the ascending trend line we identified on the 4 hours time frame. And of course, we saw how during the course of last week's trading session, price did break down the ascending trend line to instigate the potential that sellers may likely come in. And of course, you know how from a technical and theoretical standpoint, whenever price breaks down a trend line like this, we expect that at some point in time price may come back, retest the structure in an attempt to continue the downtrend. Now, with this understanding in mind, we were open to the possibility of any form of reversal pattern that could incite this retracement back into structure before the bearish momentum began. Now, at the beginning of the week, we noticed that sellers were finding it difficult to break through the support line at the 1.26615 level, giving us something that looks like a reversal pattern in the form of a double bottom structure. Now, with this formation on the chart, we begin to suspect that buyers may likely be taking over the market, and as a result of this, we wanted to join in early enough, so we marked out a level at the 1.26800 area, which was responsible for our first buy position. And of course, we had multiple entries. We had a 1.26895, the resistant line of that range bound structure. We also added one more at the breakout of our key level, and of course we added another one at the breakout of the 1.27150. So as at the first half of the week, we were running with minimum of 4 buy positions with over 100 pips thereabout. And of course, you know how we do it. When price moves significantly in our favor, we move our stop losses, secure the position, and of course the resumption of selling pressure took us out of those buy positions with a reasonable amount of profit. Now, during our live session on Wednesday, we had a new trading setup after considering the character of price action on the 15 minutes time frame right around the 1.27325 level, which interestingly meets with the ascending trend line that was broken. So we had an important confluence around that area where we said that if buyers find it difficult to climb back above that ascending trend line, we will be keen on joining a bearish move. So in light of that development, we had a new trading setup on our 15 minutes time frame. So let me show you what things was looking like on the 15 minutes time frame on Wednesday. So we had the structure here, and then look at what we had here on Wednesday. For those of you who are with me on both my TradingView and Telegram platform, you'll be familiar with this setup. So we had a range bound structure here at the 1.27370, and of course we had at the 1.27250, where we said a breakdown of the 1.27250 will be all we need to join the bearish move. And since then, we have been selling the GBPUSD. So the first half of the week was more of buying, and then the second half we begin to see bearish momentum resume, and price continues to drop to the downside. So let's go back to the 1 hour time frame, and then we had multiple levels. So remember, we had our key level at the 1.2700 area. As you will see here, we had a key level around here. we sold there. We added more again at the 1.268. And of course, I updated us this morning on both my TradingView and Telegram platform that we are going to be selling the retest of this new level at the 1.26565. And of course, if you see what happened in the last couple of hours, we've seen price come back into the structure. Selling pressure persisted around that area for about 45 minutes, inciting new selling opportunities. So as at this point in time, you should be having a minimum of 4 sell positions running in profit right now, dovetailing to about 170 to 180 pips thereabout. And for those of you who capitalize on these opportunities, well done and kudos to you. Now at this point in time, well, if you would ask me, all stop losses here should be anywhere around the 1.267 area. Remember, we do want to be giving enough breathing space for price action to move around, or anywhere around that area looks fine, just right above that descending trend line. Let's move all stop losses to that area, securing this current position so that in case price moves back up again, we will be taking out in a worst case scenario that is positive to our portfolio. So now, with a well secured position at this juncture, what is going on in this market? Well, this morning we had a couple of data from the United Kingdom, which I did share with you earlier. We talked about the retail sales, which saw a resurgence of about 2.9% compared to the previous month, which was at 1.5, I think 1.4, 1.3% thereabout. And in fact, the market was expecting a 1.5% growth in the retail sector, but the data came in 2.9%. That was tremendous, and in fact that led to some volatility around the support line we had here. We saw this volatility happen following the reaction to that event, but it appears that the this positive event wasn't strong enough to gain some positive traction in favor of the pound sterling. Remember, following this data, we saw the S&P Global publication for the composite, service and manufacturing PMI, which of course was mixed, as the manufacturing sector was the only sector that did grow in the last 1 month. So it's a mixed data from the United Kingdom this morning. Nothing strong enough to support the ascent of pound sterling at this point in time. Now, as a result of this this mixed reaction, the chances, the path of least resistance for the pound sterling is still looking bearish. Remember, the US dollar is still enjoying the renewed buying pressure that has been going on in the last couple of days due to the hawkish remark from Fed officials and of course the Fed chairman, despite the sluggish economy. Remember, the Fed chairman did mention that they will want to see more data to decide if inflation is going down truly. So they still need to see more labor-oriented data before deciding to cut interest rates. So because of that window, investors will still be willing to buy the US dollar. So as a result of this latest information, from a technical standpoint, this descending trend line here is going to be playing a significant role in guiding our trading decisions. And you know how we use our descending trend lines in this community. As long as price action remains below the descending trend line, we have no business buying this asset. So we shall continue to look out for selling opportunities as long as price remains below the descending trend line. Then there's another thing I would like to also emphasize here, which is the significant improvement in retail sales. And even despite the Bank of England maintaining higher interest rate, we still have this retail sales showing that there is still indication of robust demand and suggests increasing price pressure, of course. And increasing price pressure means that inflation is still not curtailed yet. As a result of that, we cannot ignore the potential that buyers can still come in at any point in time. But before I can consider buying the GBPUSD, I would rather want to see a significant confirmation. And one of the things I would like to look out for to start considering buying the GBPUSD is for a formation of a reversal setup. It could be a double bottom structure, something like this, where we look out to buy the breakout retest of the neckline, or we could see something like an inverse head and shoulder pattern before we can start considering buying this asset. So I would like to see something significant as regards to buying the GBPUSD, but pending the time that happens, we maintain our bearish bias and we continue to look out for more selling opportunities. And in fact, we have another new level here. There's the lowest point price action has gotten to this week, and that is the 1.26310 level. So I will encourage us all to mark out this level on our chart, 1.26310 level. So let's mark this level out on our chart. We shall be looking at adding more sell positions if price action goes ahead to break down the structure. So I will be updating my position, having a sell stop order below the structure to join the bearish move to the downside. Now, if price breaks out of the descending trend line, remember we are looking out for buying opportunity only if this descending trend line is breached or any form of reversal pattern emerges at this point. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give us updates as at when due. If you have any questions whatsoever, feel free to let me know in the comment section. If you need some clarifications, feel free to drop them. I'm here willing to be of help in that regard. So as always, I will take the next 10-15 seconds off. Let's see if there are any questions before we move on to the final assets on our watch list for this week. See you in about 10-15 seconds, and do not forget to give that video a thumbs up. Your likes are valuable, and it also helps the algorithm promote the video to a wider audience of traders, and this simply means that you are helping and supporting this community to grow, and thank you very much as you do so. See you in 10 to 15 seconds from now. Cheers. All right, so in the absence of no questions, I want to assume that we are all on the same page, and all I've said so far has been quite explanatory. I do hope you've marked out those levels accordingly on your charts. Remember, you're going to be needing them as a reference point to guide your independent trading decisions for today, depending on if you're a day trader, swing trader, or a positional trader. So with that being said, let's move on to the final asset on our watch list. So, the final asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And in fact, on the gold as well, we have been buying this asset since the beginning of the week. At no point in time did we consider selling at all, despite the fact that price action started the week right below our key level. Now, let's look at what really happened at the beginning of the week and what supported the idea that we should consider buying this asset. Now, remember, the major drivers in the market, we looked at the major drivers in the XAUUSD market, from the US Treasury bond yield struggling at the beginning of the week to the resurgence in the US dollar due to the hawkish remark from the Federal Chairman and Fed policymakers, and of course the geopolitical tensions in the Middle East, from the Russian-Ukraine war to the recent declaration by the Israeli on opening a war front against the Hezbollah in Lebanon. And these are all factors here that have supported the ascent of the gold prices through the course of the week. Then recently we had some news as regards India purchasing more gold reserve, building on their gold reserve. And of course, I also mentioned during last week how the report from the gold reserve report from China for the month of April and May came out the same, giving us a sign that China paused buying gold in the month of April and May. And I also suspected that they might have resumed, though we cannot know yet until the end of the month, when the gold reserve report from China will come out, that we will know if they truly bought in the month of June. So with all of these factors behind the scenes, for me, I still think that the path of least resistance for gold is still looking to the upside. Now, when we looked at things from a technical standpoint at the beginning of the week, remember, for the sake of clarity, let's look at the 4 hours time frame here together, as you will begin to understand what guided our decisions at the beginning of the week. Now, if you look at what happened here on the 4 hours time frame, after we took into consideration the character of price action since the beginning of the month of April, you will see that that area between the 2,275 and the $2,300 area had played a significant role in pushing price to the upside. As you will see, every attempt by the sellers to break through has always been met by strong resistance from the buyers through the last 2.5 months. And with this scenario here, we had no other choice than to continue to consider buying. And of course, for the fact that price was sitting above that robust demand zone, it made a lot of sense for us to buy the XAUUSD. Then another factor that also aided the bullish idea at the beginning of the week was the fact that since price tested the highest point here at the 2,450, that was during the mid-month of May, price did some lower lows and lower highs, and despite the series of lower lows and lower highs here, you will see that price was unable to find lower lows. So we had lower highs, but we never had lower low, because this area here had been, participant in this market has seen this area as cheap enough to buy the gold. So as a result of that, we never had any lower low, and as a result of that, we were looking at the potential of price breaking out of this trend line. So we saw the first breakout happen at the beginning of the week, giving us a positive signal that we are on the right path. And then we saw the second breakout happen here during the midweek, further confirming that decisions we made at the beginning of the week was right on point. So I needed to show us what things are looking like on the 4 hours time frame, so that we can all be on the same page when I start talking on the 1 hour time frame. Now, scaling back down into the 1 hour time frame. So right at the beginning of the week, we had another range bound structure, as you will see here. Hold on a second, let me show you. So we had a situation here. Price started the new week very bearish. We saw the momentum started at around the $2,333.50 level, dropped into the 2,315 area, and then when price got into the zone, we saw that sellers were finding it difficult to break through that area. I think we had a couple of sell positions at some point here, though one of them went into a loss, but we were able to recover that, and of course we joined the uptrend move at the breakout of that descending trend line we identified on the 4 hours time frame, just right at the 2,320 level. So that confluence there triggered our position, and since that moment we have been buying this asset. And remember, we had multiple levels. We had a 2,325, we had a 2,000, sorry so we had a 2,333.50. We also had the 2,335, and was it not yesterday morning I updated us that we will be looking out for more buying opportunities, and I updated the structure with this $2,344.50 level, which we recently joined during the New York session yesterday, and we rode it all the way into the 2,365. And in fact, I had my TP target at the 2,360. It's my TP target at that point before that sell momentum came in, leading into a consolidation phase here. Now, for those of us who are part of all of this profitable journey this week, well done and kudos to you guys all. Now, as it is right now, I updated us this morning that I will be looking at adding more buy positions at the breakout of the 2,365, or if price action retraces into a structure. Now, for those of you who are with me on my TradingView and Telegram platform, I updated us with a particular structure. As I was about going to bed, I looked at the market and I saw something interesting unfold on the chart. So I updated us with this setup here. I think this is the chart right here. Hold on a second, let me pull it. Okay, this is it right here. Now, this is what I saw during the later part of the New York session yesterday. So I can see here that price action has been finding series of higher lows since the beginning of this month, and after connecting the series of higher lows here, we have multiple trend lines. So we have this one here, we have another one here. You can see the series of higher lows, and then we have a projection of this one right here at this point. And as long as price remains above our ascending trend line, we want to continue to look out for patterns and structures that support the idea of buying, of course. Now, price has broken out of our key level, and of course the 2,340 area, a level which has been a strong resistant line since the beginning of this month. As you will see, price has been looking to break out of the structure since the beginning of the month, and every attempt by buyers to break out since the month of June began had failed. As you will see, sellers continue to push price, giving us an extended range bound structure. So this continued until until yesterday, when we finally saw price break out of that structure. Now, from a theoretical standpoint, whenever price breaks out of such key structures like this, we expect that some point in time price may come back to retest the structure that was broken. And if you look closely into this area, you will see how the structure shares a confluence with those ascending trend line. In fact, the major ascending trend line here was the thick dotted line you're seeing on your screen, shares a beautiful confluence with that area. Now, in addition to that, to further have a precise point of entry, I used my Fibonacci retracement tool to capture this impulsive move so that I can identify the golden zone area, which is between the 50 and the 78.6% of the previous impulse leg. And if you do that correctly, you will see that we have our golden zone area right within the 2,349 and the $2,339 area. That's about a $10 range structure, where I did mention that we will be looking out for a reversal pattern to continue an uptrend if ever price comes into that area. So if in fact selling pressure happens today, price drops into this area, we will be looking out for reversal setups to continue the uptrend move. However, it's not all the time price action does this kind of scenario, especially in the XAUUSD market, which is considered to be a volatile market environment. Now, should it happen that price does not come down into that buy window, and instead we see price transition into an uptrend continuation pattern, as you will see here, and in fact if you look at the structure closely, you will begin to see something that is looking like an ascending triangle. Now, to give a visual representation of what I'm talking about, look at the impulse leg, look at the resistance line, and then you will see higher lows here. Now, whenever we see this kind of structure on the chart from a theoretical standpoint, it's a sign that buyers still have a say in the market, and as they continue to knock on the ceiling at the 2,365, at some point it will cave in after much pressure, and we're beginning to see signs of such in the last couple of hours. As you will see, we saw a fake breakout here, giving us a tendency that this breakout could come anytime soon. So personally, I already have a buy stop order which has been triggered above that structure in an attempt to continue the uptrend. But if it fails, well, we'll then wait for price to come back into this buy window to look out for buying opportunities. But I just hope that price will just continue from that area to the upside. So let's see how the market will play out in the next couple of hours or so. We should be having an headway of what direction price will be heading for the last trading day of this week. So this is my simple view on the XAUUSD. Now, talking about selling potential at this point, I'm not seeing anything that will make me want to sell here unless this ascending trend line is breached and broken to the downside. So pending that happen, but if you are a scalper, you're looking for those 50 pips, 60 pips move, then you can be looking at, let me draw out something for you, for those who are looking for counter trend opportunities here, which I wouldn't be doing anyways. But for scalpers, let's look at something that could be reasonable to capitalize on here. So if we connect the series here, let me make it a different colors to emphasize its importance. Okay, now let's bring back our candle chart. So we have something like this. So if we look at the structure closely, we're looking at let's say around the $2,358.50 level. So let's mark that level out. So I will just extend it out a little bit. So we have the what's happening here? Okay, so we have the $2,358. Okay, let me $2,358.45 level. So you can see how it also shares a confluence with that trend line there. So if price action breaks down, retest the structure, we can be looking at a counter trend opportunity which could dovetail to a minimum of 100, which is not bad anyways, and a maximum of about 200 pips to catch here. Well, I think I will start considering this. I was thinking that it was very, very small, but if this is about 100 to 200 pips, is something that we could worth considering if price action ever breaks down and retests the $2,358.45 level, and then we join that move to the downside. So this is what we'll be looking at today. So let's see how the market is going to play out around this range bound structure here between the 2,365 and the 2,358-ish area to make informed decisions. But we are going to be in the what's it called, in the XAUUSD live monitoring window later today during the New York session. So if you have the privilege or you have the time, you can be part of that session where we come together to monitor real-time price action during the New York session. Now, for those of you who are joining us for the first time, the XAUUSD live window is a platform where we all come together to monitor real-time price action on the XAUUSD. So it usually kickstarts about 5 to 10 minutes into the New York session and lasts for about 5 to 7 hours depending on the volume of trading activity for that particular day. So I look forward to seeing you all in the comment section of that session. Now, the link to that session, you will find it immediately at the end of the session. So as soon as the session ends, you'll see the link to the XAUUSD live window. Click on that link, click on the notify me button, and you will get notified as soon as we come on live. So let's see. I think we are done on the XAUUSD. I don't know if you have any questions. I just hope I made myself very clear. But if you have questions and you need some clarifications, feel free to let me know in the comment section. So I will take the next 10-15 seconds as usual. Let's see if there are any questions before we start rounding off our trading activity, the Forex Morning Mastery today. All right. So in the absence of no questions, I guess we have come to the end of today's session. I see your comment, C40. Indeed, the chicken on the rice is the XAUUSD exactly. So it has been a wonderful moment with you guys today. I really enjoyed every single moment, and it's just that our like is not tallying with the number of people on board. There are some of us in the house who are yet to click on that like button. It won't cost you anything, and in fact is the cheapest way you can actually support this community to grow. And thank you very much for doing so. And for those of you who are click on the like, I really appreciate your support. You guys are wonderful. Thank you very much. You are very much welcome, Sahad Chakai. I hope I just pronounced your name correctly. Please don't mind my tongue. Okay, so with that being said here, I think we have come to the end of today's Forex Morning Mastery session. It has been a wonderful moment with you guys. I enjoyed every single moment with you, and in fact it has been a tremendously positive week for us all. And for those of us who are part of this profitable journey, well done and kudos to you. So today we were able to take on all the 3 financial instruments we have been monitoring since the beginning of the week. The USOILSPOT, the GBPUSD, and of course my favorite, the XAUUSD. And of course we were able to identify simple trading setups to guide our trading decisions for today. And of course we are looking forward to maximizing the profits we've made so far by taking advantage of more opportunities today. And I do hope you marked out those levels accordingly. If you have done so, well done, kudos to you. So all we need to do right now is exercise patience and allow the structures to mature. I see you, Zize Logosu. Good morning to you. You are very much welcome. So for those of you who joined us for the first time today, I do hope you are able to gain 1 or 2 things from what we discussed here today. And trust me, the more time you spend with us in this community, the better you get to understand and comprehend my analytical approach, which eventually will help you in improving your independent trading decisions. And always remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, let's ensure we have a well-defined risk management strategy in place. So I look forward to seeing more of you. And that reminds me, for those of you who are yet to subscribe to the channel, it's high time you did so, because I will be sharing some insightful trading setup ahead of the new week during the course of the weekend, and you do not want to miss out on these ideas. So if you are yet to subscribe, click on that subscribe button, click on the notification bell so that you can get notified as soon as I drop new content. So I look forward to seeing more of you same time On Monday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review, to start the new week on a positive note, and let's see if we can replicate what we had this week. So I wish you all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, and I wish you a wonderful weekend. Bye.